I think, but let's get it started with the first management on the show.
Yes, absolutely. We have Quess Corp, which is actually in focus on the back of what seems to be a good set of numbers this quarter. They have revenue up 25%, margins which have come in at around 5.2 versus 5.4%, so that's maintained too. We have Ajit Isaac, the CMD and CEO of the company, who's joining in now. Mr. Isaac, hi, thank you very much for joining in. Take us through this 25% growth in revenue. What led to that?
Yeah, this has been a good quarter for us overall. All our businesses have been ticking fairly well. Our headcount has reached about 212,000, so our volume of business has definitely grown. On a quarter-on-quarter basis, we've grown 5%, and year-on-year, it's 21% at the EBITDA level. So these are very healthy numbers in a context of some economic headwinds. There are two dimensions to our growth. One is that there are changes taking place in the nature of our business. We are moving from a people supply and related services model to a services and solutions model. So that's really encouraging the uptick in our contracts. And the second one is that in our industrials business, which is obviously hampered by the lack of growth in the IPP measurement in India, we are moving from the maintenance and operations and maintenance of civil, mechanical and industrial infrastructure to the operations and maintenance of digital infrastructure. So these are critically the two or three aspects that have driven our growth.
Okay, exactly. For the industrial segment, I think there was a crash in your EBIT and your margins in particular. It came down to 4.7 versus close to 10% same time last year. So what's your outlook on that particular segment?
So we are broad-basing the range of services that we are providing in that for the next, in the future. Previously, we were confined to largely the metals and energy space. Now we are getting more into the overall process industry space, which includes oil and gas, fertilizers, etc. And second is we are also handling more jobs in functional areas like material handling and overall plant operations. So that's actually driving the changes in that business, and we expect that segment of our company to become another 10% margin business in the future.
Just one quick question. You said you're moving away from people supplier, I mean essentially the temp staffing business, into services and solutions. Very briefly, could you explain that to our viewers?
Sure. So in the earlier context, we would have people on site for clients to deliver services at the supervision of client managers and officers. Today, we would like to take some of those responsibilities ourselves. So we're going higher up the value chain. Sometimes we use digital technology to help render these services, but we will be linked to service level contracts. So which means that we will be accountable for the task that we deliver and not as much dependent on the headcount on site. But having said that, I must reiterate one point. This quarter, we've actually become the largest staffing company in India. We employ about 145,000 people without apprentices in the staffing business. That makes us the largest staffing company in India too.
Okay.
The overall margins, Mr. Isaac, it's I think companies, large staffing companies around the world also, I mean, margins are, I guess, in the same region. For margins to grow significantly, you'd have to change the business model a bit away from pure temp staffing, as you said you're doing.
So margin expansion is going to be a function of a couple of things. One is our cost to serve. If you look at the cost to serve, it's mainly driven by the core to associate ratio. Previously, we were at about 200 odd in terms of number of associates to the core. That number has now become about 260, and that's way above competitor numbers. One. Second is, in terms of our own margins in this business, this has grown from about 4.2 to about 4.8%. So our own staffing business margins are growing. Best in class companies in the staffing industry work between 4.5% to about 5%. So we are closer to those numbers as of now.
Okay. Quick last question then. You bought 70% equity in Vedang Cellular Services. Take us through that acquisition which you announced last night.
Sure. So this is an acquisition we're very excited about. We have Ashish and his team, who perhaps are the finest in the network optimization and maintenance space. They're among the top 5 companies that They do that work on telecom tower network and optimization work. That's basically the active infrastructure in the telecom industry. We have another company called Maxseed, which does passive infrastructure. So on a combined basis, we'll have revenues of almost about 200 odd crores with an EBITDA of about 20 crores, giving us an EBITDA margin of about 10%. This acquisition is therefore margin accretive and EPS accretive to us.
Okay, fair enough, Mr. Isaac. We're going to let you go on that note. Thanks very much for joining in and speaking with us. So that is Quess Corp. That stock is up around 3.8%. Need to take a break with the news that the Nifty is absolutely flat at this point in time. Remember, it is October expiry as well. So